Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, guys. I am late. I'm having, like, I can't get the camera to work. You see it's like not working? I don't know what the F is going on. It's a really weird. It's just like my camera isn't even showing up anymore. I don't know. I cannot explain that one. That is really weird. It's like the USB streaming on the camera is just not working. So we have to do without the camera for now. And because of that, I missed the jobless claims number. So let's first go in and look at what that was. 239 versus an expected 240, so exactly in line, but there was a bit of a move, so that's kind of on. You bought News Squawk from News Squawk? I thought the way that process goes is, you know, you sign up for an account first and then you subscribe, so you should already have the credentials to log in. Anyways, so we're coming over here. Let's start out with the 6J, I guess, since it's up. Like, they are still fighting with this thing down here, and we come over into the treasuries, you know, later in the day, a bit of downside. So after the, it was kind of interesting how after we left, it kind of turned south. But then the Fed meeting minutes did sound hawkish, but I don't know if the market kind of decided that it wasn't too big of a deal. You can see the 2 and 10 year spread still kind of moving, steepening. Over here in equities land, pretty ugly sell-off into the end of the day, and I'm seeing lots and lots of commentary and news saying that it's 0 day to expiration trading coming in at the end of the day and destroying it. So, and we got oil. Oil also take a little bit of a hit yesterday, just continues to get hammered here. Gold and silver maybe a little bit of a reprieve today though, and copper as well. I didn't get any significant China headlines overnight, but maybe that is a good thing. I don't know. Meanwhile, Bitcoin taking another little plunge, this time going well below their support line. Seems like you need a little bit more than that for people to really, you know, create any kind of chaos over there. And then we got the dollar. After fighting around 103 yesterday and having a bit of a jump up higher, they have now come back to that area, and we are seeing a little bit of movement in the dollar off of the jobless claims numbers. What the hell is wrong with my camera? This is just so incredibly bizarre. The camera says that it's connected. Good morning, Uzi. And when I came in this morning, my computer was having trouble logging in. So there's definitely something fishy going on with my machine. Does it even show up in the device manager? Devices by connection. Where is... Now I forget how to do this. I think it comes down like from here. CI Express. Does not. Wait, so if I go back to view by type. Hold on. Still doesn't show up over there. Still doesn't show up over there. Well, they'll give you free market data for 2 weeks. This is like so driving me crazy. I cannot stand that it is not showing it to me, that my computer is not recognizing it. Something is so very, very wrong here. What's going on? No, that's not actually how it works. If you want depth of market, you have to pay for it. Really, it seems like the dollar is moved a lot more off of that than I would have expected. Yeah, it may be that they're just giving you free level 1. How else can I approach this here? The camera says it's plugged in, but I'm not getting any indication that the computer is working, like that the computer is seeing it. Is it that USB jiggle your wires? Oh, well, what I did was I plugged it in around the back. But that's still the 3.1 port. So I'm wondering if that whole USB controller went down. So I think what I need to do now is go back around to the back and try and plug it into a different set of a different colored USB plug. That's what I'm going to try now. Okay, it says USB streaming standby on the camera still, but it's not showing up over here in OBS at all. Jeez, guys. So weird. What about... So in that same USB controller, I have the USB drive thing and plugged in, and that does work. You know, I had been jiggling the wires. I just needed to keep jiggling them. So maybe I should replace that cable. I don't know. Yeah. I guess it had gotten enough of a connection for the camera to think that it was connected, but not actually do something. I don't know. Okay, well, now that I've wasted a good 20 minutes of the stream worrying about why my camera's not working, and I plugged it into the wrong outlet. Okay, so I'm gonna fix that. Was it the combination? Hold up. Oh, shoot. Wait a second, guys. Dude. I think one of my USB controllers is fried. Except for that, how come I can still see this other device then? I guess I guess I need to speed up my getting a new machine. Very interesting indeed. The funny thing here is that I wanted it plugged into the 3.2 because the battery should last longer in that. I think that what happened was I switched it to the other USB port and then it came back and it didn't work. And it was only when I unplugged it and plugged it back in that wasn't necessarily wiggling the cable that did anything so much as like replugging it in and resetting it or something. But it's in the old USB 3. It's like in the USB 3.0 port instead of the 3.1 port. It's the not the blue one. So maybe that 3.1 port is toast. It starts slowly and it happens all at one. Old rig's dying. I mean, shit happened to me too. Little things I could work around and then collapse. Well, yeah, because I can't explain why my machine didn't really want to start this morning. Like I could move the mouse around. It looked like the keyboard was working, but like the I couldn't get the login window to pop up. And so I hard reset the machine. And then when I did log in, it felt like it took a really long time for the computer to get started. So and you know, I have so many USB devices plugged in. And who knows, maybe this case is just not cooling things as well. I do kind of feel like, here, I'll show you. So I think I have this 17-inch one. Okay, so it has like 3 fans in the front. Cool. That's good that it has 3 fans in the front. But you would think that it would also have like fans in the back. I mean, it has... There's certainly room for there to be a fan in the back, but there isn't any actual mounts and stuff for it. So, yeah. Yours has 7. That one only has 3 fans. The old one had like 4 or 5. But it had some in the front and some in the back. Well, somebody did figure out how to do it. That's interesting. Look at that. They printed something. It looks like they printed something and it just goes through the little square holes. Hmm. Hmm. Oh, you play Cities Skylines? That's funny, dude. Oh. I feel like that's like such a stereotypical, such a stereotypical game for a trader to play. You know, a game that's basically all about systems and managing systems. I am wondering to myself if I should go for this, if for the next machine that I get. So here's the Silverstone case. Oh, they have a couple of them, I think. Computer cases, not form factor, case type. I guess server. And by the way, I got it's a for you. So like they're for you. See, and this one's got big old spots for fans in the back. I'm kind of leaning towards getting this one, though. Interesting thing about this one, by the way, is that it can be a regular case. So, like, if you plan on going to a rack mount setup in the future or something like that, you can switch it, which is kind of cool, right? So I'm trying to sort out what's the difference between the 44 and the 42. To make sure I'm not covering up the order flow. RM44 versus RM42 Silverstone. The RM44, they're added. Well, wait. Oh, like here's a. Oh, the 44 has 3 front intakes? Duty calls. Child's throwing up. I will be back in about 5 to 10 minutes, okay? All right. We're back. Well, man, and after all of that, so I went and took a kid to school, and we're basically right where we were. It looks like there was quite a impulse higher, though, so that's interesting. It was not across the board, but it was definitely there in the 10-year. That's curious. And was the dollar moving at that time? Looks like it was, although not extreme. And yes, I'm using Jigsaw for my DOM and NinjaTrader for my charts. Oh, I see. Pictures they've got here aren't giving me a good enough view of. Oh, there you go. So there's 3. Let's see. Spots for drives up front there. Slot for your video card. I'll have to look into compatibility and stuff because there's usually like, what they tell you in here? Limitations of video card, for instance. Product. Power supply. The limitation on the PSU. CPU color. Oh, you can take the expansion card retainer out. How much? Well, you can get it on Amazon. $337. Well, but does it come with the fans? Oh, you can get a power strip. Hey. Only 12 global ratings, so... Well, maybe I have to go for that one. Well, I tell you what, it's an awfully unexciting. I mean, I guess it's the height of the summer. So I didn't... this is totally embarrassing to me, but I did not realize the kids were starting school today. I thought it was next week. I mean, they were talking about it, but they didn't say the day that it was happening. And I also hate that they start school on a Thursday now. What's with that? I'm 1 minute late. This has been a terrible stream, hasn't it? 1 minute late, and then I had to leave. Well, let's come over to Zero Hedge and see if they have anything interesting to say about the jobless claims. Walmart erases gains despite beating and raising guidance after cautious commentary on earnings call. There's been something about people from NATO kind of hinting at maybe trying to negotiate over the Ukraine thing. Let me read that. I don't know if this is like too relevant for us, but it's something that I've been keeping track of and I want to see. The NATO official who angered Ukraine by seemingly suggesting a Land for Peace deal with Russia, has retracted his words, explaining that the quote in question was taken out of a larger, more comprehensive context. As Remix News recently reported, Stian Jensen, NATO Secretary General Jens Stoltenberg's chief of staff, spoke to the Norwegian press on Tuesday. Stoltenberg had so far cautiously avoided questions about what Ukraine should do to the end of the war. The NATO chief has consistently replied that the decision on whether to start negotiations with Russia belongs to Ukraine alone, not to third countries. Asked by journalists from the Norwegian newspaper whether Ukraine has to give up land in order to achieve peace and NATO membership, Jensen suggested that the issue had already been discussed with the alliance. I'm not saying that it has to be that way, but it could be a possible solution, he added. By Wednesday afternoon, that was a bad thing. That was a dumb thing to say. Jensen regretted having angered Ukrainians with his statement and immediately retracted it. Jensen clarified the issue to the Norwegian newspaper. It was a mistake. It was part of the larger discussion about possible future scenarios in Ukraine, and I shouldn't have said it that way. And I stressed, if they get to the point where they can negotiate, the military posture on the battlefield will play an absolutely central role and will have a decisive influence on the terms on which peace will be achieved. I'm very concerned that Ukraine is just going to become this hole that we have to throw money into forever and ever, you know? Like Iraq, but like twice as bad. Fed warns consumers will deplete excess savings by the end of quarter 3. But overall, not too much. Futures Trader did a poll on his Trader's Bite. Do you trade better in higher volatility or lower volatility? And most said better. That's not complicated enough of a poll. Because there's like this point at which the volatility becomes so extreme that you just get destroyed. Right? Former U.S. Treasury Secretary Lawrence Summers cautioned that the recent run-up in 10-year yields may have further to go and that pressures are building to keep those benchmark rates much higher than experienced over the past 2 decades. True. I saw that. He tweeted that yesterday. Tell you what, Nassim Taleb sure does. It's interesting to me, the issues that get Nassim Taleb animated. And it seems that one of the ones that really, really gets him going is anything to do with IQ and like genetics. Like basically anything that would be like associated with eugenics. Which I totally agree with him on this, and I'm really glad that he points out like these fallacies with the statistics. But when you have a fat-tailed distribution, trying to come in and like make these top-level decisions based on those kinds of averages is just stupid, right? And most people don't seem to understand that. But it's not something that like I spend a considerable amount of my time concerned about, and it sure seems like that he does. And I wonder why that is. Like who he's following or where he's getting information that makes him concerned about that. Elon Musk is in Japan. A little late in Japanese time to be in Japan, don't you think? I don't know if I agree with this one. So Elon Musk 2 hours ago retweeting Viv Battle Angel Viv, who says more CEOs and senior management folks should start posting on X and do so themselves. Super lame to see accounts run by their PR department, chief of staff, or similar. Yeah, no, I don't think so. Because number one, it's gotten Elon Musk in a lot of trouble. And, like looking at this Linus Tech Tips thing, this one is so interesting because you would think that if, you made your living, you became famous being on YouTube and interacting with the community and stuff. So you would think that you would be good at interacting with the community. Now, maybe part of Linus's problem is that there's a lot of people out there that just really want to hate him. But the general conclusion that I'm seeing over there is that, Linus should not be writing official apology statements or anything like that. He made a statement or two and it seemed to make things worse. And so now everything that's coming out over there is sanitized PR stuff. So much sanitized PR type of stuff that even that is kind of getting in trouble because they basically said, "Oh, I'm shocked to find out about this particular thing," and then everybody was like, "Well, but you did know, or you should have known." Well, I don't know. For one, we don't know the extent of which he knew, and two, I do kind of think that it was just like a rote PR response that he didn't even write. So no, I'm thinking that of famous people out there, like really think about it, guys. If you're a famous guy, okay, especially if you're a guy or you're a Republican, all right? They don't like you, and they don't like that you had success, right? You saw it happen to Felix. What is his name? PewDiePie. You saw it happen to PewDiePie. It's happening to Linus Tech Tips. I don't think that Mr. Beast is a conservative guy. I think he's leans a little bit more left, but he is a guy. I'm telling you, Jimmy, look out. They're going to come for you sooner or later. You're just doing too well. That's just what seems to happen to everybody that gets at the top of the social media. And unless you're like with the Kardashians. This is where I don't get it, is that people are jumping all over Linus Tech Tips, but man, the Kardashians have done all sorts of stupid shit and nobody cares. What's with that? Kind of seems a little sketchy, don't you think? So yes, I think that the general result that I continue seeing more and more is that anybody who becomes successful wants to be out of the public eye as much as possible. Elon Musk is one of the very, very few people that is the opposite. And that's not a good thing for society, but I can't blame them because anybody that puts themselves out there just gets destroyed. Oh, you know what? When I left, I should have turned on an ad because YouTube keeps trying to convince me to give you guys ads. It's up there with a nice blue outline and everything. Well, let's read this Zero Hedge story. This is authored by Simon White, Bloomberg macro strategist. Okay, so this should be good stuff. The stock rally has loosened financial conditions sufficiently to pare back a little near-term recession risk. A recession in the U.S. by the end of the year is still the base case. The recession gauge, an indicator consisting of 14 recession submodels, continues to infer a slump is more likely than not. With half the submodels currently activated, the threshold for a recession is 40%. But the stock market has risen this year in defiance of weak data. As the chart below shows, the S&P normally has a very close relationship with the outperformance of leading versus coincident data. But this year, stocks have rallied despite weak leading data, which includes the yield curve, building permits, average weekly hours worked, unemployment claims, etc. George Soros's reflexivity has played a part here. Markets and economies interact in a myriad ways, sometimes reinforcing each other negatively and sometimes positively. The stock market is the main driver of financial conditions as conventionally measured. Thus, the rally has loosened financial conditions that were at the tightness normally consistent with an oncoming recession. The easing in financial conditions has been sharp enough to reduce the recession risk. Thus, an improvement in the financial economy may be having a material positive impact, though sentiment and the wealth effect on real economy. This leaves two questions. Will a recession be averted altogether? And two, what is the outlook for stocks? As mentioned, a recession is still the base case. The job market continues to slow, and other markers of growth, such as retail sales, are also not in great shape, but jubilant month-on-month data. Such slowdown signs are likely to rein the Fed in even as inflation begins to show signs of stickiness or re-acceleration. Pressure would come off real rates after the sharp tightening they have seen, keeping stocks relatively supported, at least in nominal terms, despite the signs of economic slowing. One risk factor to bear in mind is credit. All bets on a mild recession or one being avoided altogether would be off if the credit markets were to face serious turbulence. I find the whole thing about how bad will a recession be, it doesn't seem like you can really actually predict it ahead of time. I'm kind of coming down to the conclusion that when we come in and we say, well, yeah, we'll probably have a recession, but it'll probably be a kind of a mild one. I think that there's kind of a little bit of a base case that you can lay out, which is okay, what is the problem that we have right now and what is leading us into a recession, and how difficult of a problem is that to solve? And if it's really just all about tight monetary policy, then that one's easy to solve. You just put stimulus back into the economy, you bring rates down, and everything should be fine. And then, yeah, you would have a short recession. But if we're having a recession because of stagflation, because that the inflation just isn't going away, then that's a different matter entirely, isn't it? That's a different matter entirely. And then that's something that could go on for a really long time, and that the Federal Reserve kind of has a limited ability to deal with. Or if you have a recession and then that recession results in some sort of an explosion in the economy, which is to say that something breaks, like the regional banking sector collapses or commercial real estate collapses, right? That could also be something that takes a very long time to predict. And so even though maybe we have a little bit of things to go on to say whether a recession will be long or short, the issue is that those things that we can see beforehand will almost always suggest that it's going to be a short recession. And there's so many risk factors that are almost impossible to predict that are the actual real determinants as to how severe it actually will be. So the treasuries are pushing on the upside again. I am seeing the volume come in long. I wouldn't say that it's too strong. It's still kind of in a mode that I kind of feel hesitant to trade it. Also, given everything else that's happened today, it's probably best for me to say that I'm taking the day off, right? I've missed a little bit too much of the action, and there's a possibility that I will have to step away again here to take the other kids, because what's happening is that the child is throwing up. So my wife will stay here and watch him while I drive the kids. So I don't think that I should get myself into a position. Although certainly at this point, I would have to favor a long based on the action. Although I do find it kind of interesting that overall the trend has been down, but not while we've been sitting here over the past week, right? Like I'd say that during our trading period, there's been more up bars than down bars. Certainly that's the case today and yesterday. What else we got? I think it's getting time. You know, I feel like I'm having all these things like going bad. So on this monitor over here, I don't think you can see it. So if I come over here to the charts, yeah, you don't see it. Like, I get like a line at the bottom of the screen. So I don't know if that's some setting. So I did kind of change some settings the other day on it. I'm like, okay, so does the, well, what do we have? Display, ratio, sharpness, input, sports, display port, game enhance mode, overclock, FreeSync response time. Oh, you know what I should check here is like, display settings. Advanced display settings. Sorry about that. I totally messed that up. when I changed the hertz on that monitor, it didn't like it. It didn't like it, so it crashed. But we're back. We're fine now. Oh, and the treasuries come back so fast. Yeah, that is not action that makes me want to trade, right? There's it is overall up, but like to go, how much was that? 6 ticks just like that? Nah, no thanks. Okay, what is the theory called where there is a strong meta order one way, another one would sooner than later create on-way trade reversing liquidity hole? So I think you misunderstand. So what happens is as the meta order gets larger and larger and larger, the impact that those orders have starts to diminish. So they still have impact, especially because you're having more orders, but the impact of each individual order is less. And that can eventually result in a liquidity hole where the market makers are just so strained that they don't want to put orders up in there. And it kind of paradoxically creates a place where price has a difficult time getting away from it. Okay. Now, typically what you do if you are executing a large meta order, like say you are using the Almgren-Kris algorithm, what you would want to do is wait a certain amount of time, usually around 45 minutes, in order for the liquidity hole to recover, essentially, to fill back in. That liquidity is there again now for you to execute into, and then you can start the next leg of the trade. Now, there is a period there, right as that liquidity hole starts to form, where you can kind of use that hole as a slingshot, because all of that liquidity behind you, behind the move, is not recovered yet. And so if somebody comes in with an opposing meta order, and this is the inverse sine law is what I call it, if somebody trades the other way, they're gonna like retrace that whole move. If you get another opposing meta order that's of equal magnitude, it will go further than the original meta order because of the lack of liquidity behind it. So that's how I was able to say yesterday, well, we did come up here, we pulled back a little bit. It looks like there's a liquidity hole, and that's kind of what we've been floating in. And I'm not so concerned about a really strong move to the downside, because if somebody was trying to play that game, they would have already done it. Now, in the end, the flows did turn negative, though. So yesterday was a little bit of an odd day. It looked like that there was somebody buying it there yesterday, probably because of the Japanese yen, which, by the way, we are like above 145 today. When there is CPI, for example, there is a one-way trade on it way, but then it swings back for some reason. Yeah. Well, now that one, after news, that just has a lot more to do with the liquidity hole, right? Like, you're creating such a large liquidity hole that, like, it just sucks you back into it. Yeah. And so that's why you will often see, after big pieces of news, those moves, like, almost completely retrace and then move higher. There actually, that downside move was quite a bit. So I would call it a liquidity hole for sure. You know, I'm not even sure if we should call it a liquidity hole, but an area of low liquidity, right? When I'm looking at a liquidity hole in ZN, you know, it's usually something that happens around 1 or 2 prices, right? Whereas what we're talking about with news, you could have this whole section of like 8 ticks that it just slips through, right? But having a lot of volume trade at a single location very quickly, or just slipping through a large section of prices very quickly, can create strains on the liquidity. Just think about it from the perspective of, okay, what if I was sitting out here and my strategy was I'm a market maker and somehow I got a good spot in the queue. I want to go long at 12. And then all of a sudden, out of nowhere, we trade down 8 ticks and break the lows. You think that I really want to put limit orders long out anymore? No, I'm gonna be like, nope, this is too dangerous of a market for me to trade in, and I'm not going to provide more liquidity to this market because I'm now like way underwater. I'm gonna wait for them to like chill out, and then maybe I could try and recover my position by providing liquidity down in here, right? Or even more likely, I just puke it with everybody else, right? But even if I puke it and I take the loss, I'm not going to be very anxious to try and put more bids out there, am I? Right? So it's those sorts of things that, you know, you notice when the market orders don't really want to put orders up anymore. Sorry, when the limit orders don't want to really take fills anymore. That's something you kind of have to take note of. Especially when it does this thing where like it ticks up and it ticks down and nobody on either the bid or the offer really wants to put up a whole lot of contracts. And it does that pretty consistently over a long period of time. That's the thing that I'm really, really looking for to say. It looks like there's a liquidity hole. And you will usually see it in the volume profile. Yeah, probably no mistake that we came back to this 13 here, because that was kind of where they had built out the most volume before. And it hadn't been too long since then. If it's been more than 45 minutes, then I ignored those prices, but it was fairly recent. And I'm in our eyes without, is there any way we can tell the difference of when it is going to reverse or more likely, or is it completely random and it reverses? Well, from our perspective and from a quantitative perspective, it's random, yes. But the person that is coming in and taking that opposite trade, you know, they might have a reason to do so, right? So you could potentially predict them, but you would have to know something about the market that would tell you that somebody's likely to try and pull that sort of a thing in that place. You know, like the other day with the Japanese yen, we knew that 145 was a location that the Japanese has engaged in currency intervention before. And so one could have very potentially said that, you know, if the news goes the wrong way and starts pushing rates up, that the Bank of Japan might immediately come in and reverse it. And that's what I think happened on, what was it, Tuesday now? Right? Yeah, Tuesday. So, but there's nothing in the data that would be able to tell you that that's lurking out there. Like, how would it? Like, this is the thing that I find so odd about the technical analysis approach to trading, the typical retail trader's approach to trading. If I want to manipulate the market, well, maybe I don't want to manipulate the market, but I want to take that risky trade. It is a risky trade, okay? I want to go long, and I want to do so in a way that maximizes my impact on the market and gives the market the best chance to continue going my way, right? So I'm going to wait for an opposing meta order the other way and then come in at exactly the right time to retrace that move and push us higher, or whatever the deal is, right? Okay, so I'm looking to go long. I don't care, like, all of these other little things. Like, I'm going to go long. Why am I going to go long? Am I just going to go long because it came down and I think, you know, that, like, that's a technical trade? I really don't think that there's a lot of really, really large funds trading a ton of money off of that sort of a thing. The market is just very, very statistically efficient. Like, the amount of room to do that sort of a thing, it's really not there, right? The reason I'm going to be taking a long in this current market, if that's what I was doing, if I was going to go long in treasuries, what would be some of the fundamental reasons that I might be doing so? Well, most likely it's because I think that there's going to be a recession before the end of the year, like we were just talking about in that Bloomberg story. And so rates should come back really aggressively at some point, right? And that's why I might be going along. Okay, so if that's the reason that I'm going along, do I care that there was a head and shoulders pattern that just happened? No. I'm just going to wait for the liquidity conditions that are favorable for me. So all of this nonsense about, you want this pattern in this situation, like, it doesn't predict it at all, because it has nothing, those things have nothing to do with the reasons why this guy may execute the large meta order, right? In that case, it's the fundamentals, right? But what makes it even more difficult is that fundamentals aren't the only reason that people will end up having to make really huge transactions like that. Sometimes it's just like this rote systemic thing that you have to do because that's what your fund strategy says. And there's no way that anybody from the outside would be able to predict what you're doing without having access to your internal information about, like, how many people put money into the fund and took money out of the fund and all of the other assets, how they're performing, and everything else that determines what you have to do. Right? So to think that the past data would predict which direction it's going to go is really just doesn't make any sense. There's no reason for us to think that it would. It comes back to this really interesting conundrum that I see. So I want to try and relate this to something that I see at a societal level that I find really, really curious. So yesterday, I watched 10 Things I Hate About You. You seen that? I feel like that, if you're a millennial and you're having a party and you got all your millennial friends over, and maybe they have their kids with them, because this is an okay show for kids, especially for teenagers. And you want to watch a movie that would be fun, you can all kind of talk over and have fun watching. 10 Things I Hate About You is a great movie to do that. Especially because you got, like, Heath Ledger and... man, all of those famous actors in there, and it's like one of their first movies. They're super, super young, and you just had no clue what was coming in the future, right? Just that's super crazy, right? And it's a good and it's a funny movie. Yeah, but one of the things that I find curious about this movie is that there are a lot of themes in that movie that are relevant today. Especially this whole thing about kind of wanting to rebel against not just your parents, but like literally everything in society and almost become antisocial. And this kind of dynamic between men and women where, you know, the women want to be independent and they kind of feel like that getting into their relationship interferes with that and so forth. And that kind of fight back and forth. Like that is something that has only become more prominent and a bigger portion of what we're seeing in society today with millennials. And so it's really interesting to me that almost 20 years ago or something like that, I mean, it was a long time ago, they made this movie that they were able to make a work that had a social commentary that was still so relevant today, and if not more relevant today. And so then you kind of have to ask yourself, well, okay, how did they do that? Is this just like a timeless message? Well, I don't think so. I think that these really are things that are pretty specific to our generation. So was it that they saw where the society was going and, you know, it just went that way? Or was it the opposite? Was it that us seeing that in the media kind of programmed us to approach the world in this manner? That it almost becomes like a self-fulfilling prophecy, that you do the action and it causes the thing to happen, rather than you predicting that this is the way that where things are going, right? In trading, technical analysis is like trying to predict and come in and say, based on the data that I have now, what is the most likely thing to happen next? And I don't even necessarily know why. But that is not the approach to trading, at least. Maybe investing is a little bit different, but like from an execution perspective, that is not the approach that the professional executor does. But the professional trader that is doing execution, that is not the way that they approach, because their actions have a very strong impact on the market. And so it is the opposite. They are going to make things happen. And they can kind of predict how things are going to turn out, or at least tilt things in their favor, because their actions have such a strong impact. Yeah? And so what I'm trying to do is, instead of trying to say the past data suggests that X should happen, instead, I'm trying to put myself in the shoes of those people that are making the decisions that will move the market. What are they likely to do? What might they have up their sleeves today? What are the couple of the reasons that we have to trade today, and the flows that we might potentially see? Well, this action here today is starting to give me a little bit of deja vu from yesterday, right? Because it was kind of the same thing where it seemed like it was going to the upside and it was pretty strong, and then it just like completely reverses. Now, yesterday they did go a bit lower. Today I'm not sure. I don't know why they're trading. I am hearing some commentary from European central bankers at the moment. Oh, wait, whoa. I am starting a class action lawsuit against Elon Musk for stealing X from the Latinx community. If you're in the Latinx community like me and you're tired of billionaires stealing from you, please join. They are not going to like that. That is, what are you doing, AOC? Oh, man. Politicians these days, man. It's the internet. I suppose that it's a little bit hypocritical of a thing for me to say as somebody that has a YouTube channel and has put a lot of effort into trying to make the YouTube successful, but it really seems to me that social media and YouTube is just creating so many problems, and we're all just kind of looking away. And nobody's sitting there saying, you know what, YouTube, the way that your algorithm is structured right now is really harmful to people, and you should change it. Well, initial action in the E-mini, not too favorable, is it? It's only like 10 points of damage, so that might not seem like too much, and we're still well within the overnight range. But when I look at the cumulative delta, I can see that they are selling it pretty hard. Now, there seems to be a significant amount of absorption in here, so there does appear to be some traders in the equity futures, at least, trying to step in here and hold it. And so does that take us to 4.3 now? Yeah. I see. But really what we're seeing, like, from a technical perspective is an attempt to get into yesterday's range and it being almost immediately rejected. So I suppose you could see a push to new lows and everything. It's not supported in the order flows that we've seen so far. For instance, in the 10-year treasury, you know, there was about there's been about 20k contracts long on the session, and then since then just going sideways. So I suppose that would be a lot of people that might have to puke if we go lower, but I'm not so sure that we're being pushed down by a large meta order. We are being moved by the dollar. Like, it looks like the dollar's heading towards new highs here. What's this? This morning, global bond yields hitting a 50-year high, a move that was catalyzed by what Bloomberg dubbed a miserable 20-year auction, which priced with the longest tail, or the difference between the average and cutoff prices, since 1987, while the bid-to-cover ratio fell to the lowest since September. The Ministry of Finance sold about 992.5 billion yen of the bond at an average of 1.322%, with the yield at 1.385 for the lowest accepted price. Oh yeah, like who the hell in the current environment would buy a bond at 1.385%? The dismal reception promptly sent yields to the highest level since January. Traders pointed to the huge tell as well as the low 2.8 bid-to-cover ratio for this bond compared with the strong 3.5 ratio at last week's 30-year auction as a reason for the rise in yields. The results of the auction came as a surprise, said Shoki Omori, chief desk strategist at Mizuho Securities, with demand coming in extremely weak. I sound so American right now, don't I? Omori said the 20-year bond was an outlier because of the absence of defined buyer profile that most people with short positions in JGBs had bought before the auction. The buyers for the 30-year bonds were mostly life insurers, which have been steadily buying 30 years before the auction, said Kaori Shoru, Japan rate strategist at SMBC Nikko. On the other hand, banks and pension funds were the main players in the 20-year bond auction. For them, the current level might not be cheap enough, as yields may rise further as U.S. Treasury yields are rising. And there is speculation that the Bank of Japan may end its negative rate policy. And by the way, as we're doing so, we're starting to touch lows of the day in the 10-year, or at least lows of the regular session. What would it be for the overnight low? Would be 109.05 half, which is decently down there below us. Yields on other tenors inched up to the 5-year yield rose 2 basis points, while still far from the de facto upper bound of 1% that the Bank of Japan has set. The 10-year JGB yield hit 0.655, up from a low of 0.565. Since the Bank of Japan's monetary policy meeting at the end of July, when the central bank tweaked its yield curve control to allow the 10-year to rise as high as 1%, investors have been carefully testing to see how much the Bank of Japan will allow yields to rise. The last time the 10-year yield hit 0.655, the central bank stepped in with an emergency bond buying operation. As Bloomberg's Tommy Utoslaki writes, man, I don't know how you would say that. The miserable auction may well reflect mounting bets that the Bank of Japan's yield curve control will soon be loosened. But it's also a significant warning sign for global government debt at a time when yields are already at 15-year highs. Soaring JGB yields would put further upward pressure on the rest of the world and also mean tougher fiscal budget challenges. Commenting on the auction, Saxo Alitha Spinozzi wrote that rising JGB yields threaten bonds worldwide, so we see EU and US sovereign yields accelerating their rise this morning. As noted earlier, global government bond yields extend their climb to the highest level since the financial crisis after hawkish FOMC comments and resilient economic data challenges the view that central bank rates are peaking. The 10-year Treasury yield approached 4.31. Within a few basis points of its 2022 peak, the equivalent UK yield jumped to a 15-year high, while its German counterpart approached the highest since 2011. That was from Zero Hedge. So they have not pushed lower yet. It looks like they may go. They may as of yet go. I still, again, don't see support for it in the flows, but the Japanese yen is falling here. And they are now at 145.27. They got as low as 145 even, and now they're pushing back up. So here is where I again have to kind of be like, well, might the Japanese choose to step in here? There's no way for me to know. So we kind of have to be cautious, like, because I do want to get in, I do kind of, when I start to see it go down, I start to get a little excited, and I'm like, okay, like we might be able to push this. But then you have to look out for, getting smacked in the face the other way. I wish I could see when that happened, when that auction occurred. Oh my, r/Linus Tech Tips is in community only mode. I've temporarily switched the subreddit to community mode only, meaning only people with 50 plus combined Linus Tech Tips karma can post or comment here to deal with the influx of traffic we've had the past few days. This isn't an attempt to censor dissenting opinions or cover for LMG. I'm just bored of having to deal with incels and bandwagoners from r/all that have jumped on an opportunity to derail conversations and spread hatred. Hopefully this should improve the standard of discourse. All the best. You know what? This is probably a good decision. I tell you what, I'm so enthralled by this Linus Tech Tips drama. I feel like that it's like everybody's feelings about social media and virality and YouTube and approach to work and capitalism all bundled up into this like perfect intersection of all of the issues so that people can argue about it. And I have seen so much toxicity around the debate for that. I mean, I find it incredibly interesting, and I've spent a good deal of time talking with people about it. I don't want to call necessarily arguing, because it's most of my comments have kind of been more like, well, you're saying this, but we know this, this, and this, so we don't necessarily know this, or, you know, and not necessarily trying to argue like what he did was okay or not okay, or we should do this or not do this. But it's just so interesting to see people talk about it and their attitudes and everything. And I'm just 100% hooked. I'm so hooked. But I have also seen a lot of insane toxicity, like name calling, and everybody's questioning everybody else's motives for why they're saying what they are. It's just nutso. The whole thing is just nutso. So we'll see what happens now that they've put them into community only mode. I don't know. I feel very, very tempted. No, you know what? The market maker may be trying to do me a favor here. He might be like, look, Seth, I know that you love to go short the treasuries. We're giving you the perfect opportunity to do it. Why don't you do it, Seth? I really want to. I really do. But I don't think it's appropriate for me today, because I do think I might have to take a kid to school in 30 minutes. So, and it's been kind of a messy session, and the flows just don't support it. Even if I didn't have that, I'm not sure that I should be taking a short here. Maybe if we broke the lows, though. Maybe if we broke the lows, maybe I can justify one. Now that's always kind of a sucky trade, because then you're chasing, you know? But I think that we could have some opportunity to push yields a little bit further. Looks like they removed some of the sexual assault allegations off of Reddit. Okay, so there you go. Okay, so it's doing so, pushing quite a bit of volume in front of it. So I'm seeing a little bit of a fight here. So I kind of a little bit of difficulty here picking a price. Like, I'm curious that nobody's hitting 303. Well, that did not work out very well. Uzi says, oof. It really was like as soon as I hit it, they came back, didn't it? I had kind of been waiting, and so I decided to hit 304, and they immediately fell back. That was about as bad of a attempt to catch the edge as you could possibly pull off. Buying the high always sucks. Well, I mean, it's kind of not too hard when we're at the high. Is it right? Now, if that really ends up being the high of the day, then it really is going to be like, holy crap. I don't know, Uzi. I think that's a fair criticism. I do think that that's a fair criticism. Like, I do kind of feel like I am betting on a pretty big momentum push to new lows. I wouldn't necessarily say that it's been ranging for the last like 6 hours. Like, I suppose that is true when you're only looking at price. And like you're just looking at the chart, because the first thing that I would say is that the amount that we have moved here in this session is a pretty decent amount, and for them to have gone from the high of this to the low here in the treasuries, I think is pretty significant. And there is a pretty significant change in cumulative delta. So like, the thing that's weird is that we saw about 20,000 contracts buy in ZN, but when you go and you look at the 30-year, the picture is very, very different, right? Or when you look at ZB, they're very consistently just trading down. Wow, they busted through 4-3. They're pretty hard too. Okay. I do kind of feel like that they should have just busted through there. And we did see a little bit of buying in the 10 years. So I think on both of those lots there that went about as poorly as it possibly could. Looking at the divergence in delta and price and ZN, it does make sense in theory. Yeah, I mean, I guess the point that I'm trying to make is that there is kind of evidence that there's something going on out there, and at the moment it kind of looks like that the hawks are having a moment here, and above 4.3%, I do think that there's a scenario where things could get really crazy, because if rates start going, it's gonna like show up on everybody's board, right? And this is just kind of revenge for the move from after retail sales, right? We're at yesterday's delta high too. I don't know if we can. I never reset my delta, but I don't necessarily watch. I only care about like the delta on an individual move. I don't know if I can compare yesterday's delta high and make anything of it. Should say, though, it is still pretty rangy. Yes. Well, if we're making new delta high today and the trade is still down, it should support your trade thesis. Yeah. Well, in other words, if we do start trading to the downside and people start puking, there's probably going to be a lot of really hard puking in ZN in particular, huh? But the only one that has the flows that are really strongly support a large meta order selling is ZB, which is also kind of helping me out right now in this trade because the 10-year did come back a little bit. I'm not losing too much because the ZB barely budged off of the low. Meanwhile, I'm getting some clicky click over in ES, and they're kind of all of a sudden acting like maybe they're going to make a look at the low. Hard to tell. It sure did seem like I saw something out of the corner of my eye that kind of said that maybe they were going to shift. Why you say 09.5 is going to be a little funny. Well, I guess there is a lot of volume there. But a lot of that was from the like the earlier jobless claims, wasn't it? Yeah. You might be right. It might have been like a push to low and then just revert back to the mean. 09.5 is really actually the better spot to have started building a position from. It's like one of those whoever wins here, that's the way she goes scenario. I hope not. If that's what it is, then I probably don't want to be in a trade right now, right? Well, there's ZB taking the downtick. Well, no. I mean, if a big seller piles in here because of that, and I win because of it, then good. You know, that's great. I make money from it, but that's not the reason that I'm in the trade or a reason that I would want to be in a trade, right? The reason I want to be in a trade is because I have some reason to believe that there's a large meta order seller out there that is going to sell no matter what. I'd say at the moment that we're still within the range of that we might be okay, that we still have enough evidence to support staying in the trade. And it does look a little heavy. I mean, like we did pull back there, but it was not a very impressive pullback, was it? You started reading Trades, Quotes, and Prices book. A great recommendation. Thank you. I love that book so much, man. That is my favorite book. I would really like to get like a nice version of the book. Maybe I can find somebody that does bookbinding and pay them to bind it all nice or something. I was talking about that with my wife the other day. I was like, hey, look at this bookbinding thing. Isn't that cool? We should get into bookbinding. And she's like, nah, that doesn't look fun. I just don't get it. It's like, okay, so you love these little diamond painting things where you tediously go and put pixel by pixel an entire picture. And that's fun. But binding a book would not be fun. Okay. I don't understand that, but okay. No, it's not that it's not bound well. It's that I want one that like looks super fancy and made out of leather and stuff. It's definitely held up. And I've used that book a lot. I mean, it's a textbook. It's built tough. Yep. Okay, well, the 30-year hasn't quite touched that 17. It's sitting there, but no orders have gone off on it. Probably anybody that would want to sell is probably sitting there with their offer at 18 instead for now. I'm looking at the one that I have here, and I'm like, I sure could knock a kid out with this book. Yeah, there's a lot of these are. You know what, the one that I have that I think is so funny is like a really heavy hitting textbook is the McGee's The Technical Analysis of Stock Trends. You know, it was the first book that I have, and it's the one that, you know, it's basically like everything that I'm saying is this book is nonsense. But it's a thick book. It's a serious book. It is. Okay, so there was a reload there at 08 half, but they ticked up. Yeah, but back in the day, yeah, I don't. One of the things that I find really funny in trading is how people are able to fill books up with like almost no information. Like many of the trading books that I've read on technical analysis that have been recommended by people are like, they could explain the pattern or the thing that they're looking at in one chapter, and then the whole rest of the book is just them like doing a pedantic retreading of the charts. You know, it's so boring to read, and it's so difficult to keep up with sometimes, because number one, they're describing a chart with text, and but number two, they're not actually adding any content. They're just like reiterating the same information over and over and over again. Whereas with the Trades, Quotes, and Prices video book is like completely the opposite. There is so much informational content packed into every page. And then at the end of the chapter, they link to all of these studies to go and read. Like, it's insane how much knowledge is in that one little book. And like, traders are completely ignorant of almost all of this information. Because it may not seem like it, but I feel like that everything that they talk about in that book is potentially relevant to us. You know, it's just the difficulty is figuring out how it's relevant to us, because it's definitely relevant to the professionals. But how do you play it to what we're doing now is the question. Okay, so there has been some big orders down here at 08 half, kind of stacking and playing some games here. But it looks like they just pulled that time. So they pulled at 08. Nobody traded through 08. It ticked back up, but the big order that was sitting there at 08 disappeared. And now I'm, okay, only 1432. So there does appear to be somebody willing to bid it up at 0.5. So I suppose I could say that in this location we're maybe seeing a little bit of signs of defense. The deltas are definitely turning south now in the 10-year though. Yep, it's crazy. The only thing is how to apply it to my day trading. Yep. And I mean, that's the big thing that I was able to do, is I was able to take the big ideas in that book and help apply it to you guys. And that's what, all of those videos are about. Part of what helped us do that was the inelastic market hypothesis and some of the stuff that has come out since that book. I do kind of think that, they would benefit from a new edition of the book, or if Jean-Philippe were to release a new book of some sort. I would love to see Jean-Philippe write a book that was targeted at a general audience and kind of went more into his own opinions and approaches to the world. Because he's, just following him on LinkedIn, he seems like a really cool guy. I mean, like you look at pictures of him. He looks like a super nerd, and he is, but he's also seems like a really kind and wise person as well. That's just me. Maybe I'm just like idolizing him too much. I kind of feel like anytime you idolize a person too much, you'll be disappointed. But I really like reading his content on LinkedIn, and I would love to read a book. I would love to see a book that was kind of more at a general audience level. Yeah, I didn't even think about following on LinkedIn. I'm telling you, don't tell anybody, guys. That's one of the biggest secrets that I'm not going to make a video on it because it's hush hush. Okay. But one of the biggest edges that I've found is adding people on LinkedIn, because these professionals, the people that really actually understand what's going on, they're not allowed to post on Twitter, but they're allowed to have LinkedIn accounts. And I see people post a lot of really good quantitative finance information every day. And so I wouldn't just follow Jean-Philippe. I would go and look at who he's following and look at the comments that the posts that he's commenting on and the people that he's liking, and maybe follow them too. And you build your network out from there, right? Because LinkedIn shows you when your friend likes something else and things like that. So I haven't been disappointed in. Well, I appreciate it. I think, so going back to this Linus Tech Tips situation, I can look at that and see some things where I'm kind of like, well, I would think that if I was running a business that I would probably do certain things a little bit differently. And I don't know if that would make things better or worse for me. I mean, the whole thing is I don't have that kind of experience. So I would probably make a completely different set of mistakes. I don't think, I think that we kind of have this impression that why is it that all famous people turn out to be douchebags? And I don't think that's it. I think it's that everybody is a douchebag and that they just don't have that much scrutiny put on them. Everybody makes mistakes. I am not always the most empathetic person in terms of I definitely empathize very strongly when people are sharing things, and I feel the emotions very strongly, but the logic part of my brain almost always overrides that. And I'm more concerned about, this is the logical thing that they need to know, And so, if you're feeling emotions and you just need somebody to listen to you, I'm probably not your guy. That's just one thing I know about myself that I don't think is ideal, could you say? Right? So I'm sure that if I was put under the same amount of scrutiny that Linus Tech Tips is, I would hope that I fare better, but I'm sure that there would be people that would be unhappy with me. I'm sure that there would be valid criticisms out there. You know what I mean? That's why if you really lionize and idealize somebody too much, you'll almost always be disappointed. You'll almost always be disappointed. I think, so can I go even further on this and say something that might be a little bit controversial? I think that this is one of the main causes behind a lot of mistreatment of women in relationships. Because what happens is men are kind of taught to idealize women. It's like through idealizing women that many men find motivation, right? I need to go out and do great things so that I can get a woman and so that I can provide for her and all of these things, right? And then what happens is you get into the relationship and you get to find the real person, and they aren't this ideal person that you thought that they were. And so then you think less of them and you don't treat them with the same respect that you did before. Because you're disappointed, you know? The Disney spell. I really do think that this happens. I really feel that, like, the more deeply you understand that we all suck, the easier things will be for you in life. You know? That doesn't mean that there aren't some people out there, not some of us, but it doesn't mean that there aren't some people out there that are really just awful people. You know, like the kind of people that will come out and, you know, defraud thousands of people and do all sorts of other awful, callous things. Okay, those are definitely out there. But I kind of feel like that we expect a little bit more from our celebrities than is realistic to expect from a human. Show D that picture I sent you. Do you find it useful to organize candles to Delta colors? Oh, yeah. So he's got this thing where he's kind of changing the colors based on Delta. So you tell me, do you find that useful? I never look at it, so, you know, that's one of the things that I find that's a little frustrating about, like, chart indicators, you know, is that you kind of have to put on the chart and watch it for a little while to really see if there's any value to it, because you kind of have to train your brain to see it. These colors don't mean anything to me. It's the hurting people that's hurting people. Well, it's like with Linus Tech Tips, okay? So, like, there's just been a lot of really heavy discussion, like really toxic discussion that's come in. And there's all of these people that are just saying such awful things about him, you know? They're assuming that he has ill intentions about everything. They're basically, like, calling him a thief and a liar and all of these things. And a narcissist, and that's the other thing, is that they say that he's a narcissist, and I'm like, I have never detected any degree of narcissism from this guy. If anything, this is a person that has been compelled to be humble more than most people, you know, and that is, it actually tends to speak well of somebody, you know. Everybody makes mistakes, but having the guts to be able to go out and fail and have to apologize over and over again is not, most people can't do that, you know? And it's a little horrifying to me to see people like he made that video. They made an apology video yesterday, and like some of them were. I mean, it was very serious. You could tell that like sentiment over at that company has been harmed. Let's say, okay, and I think his wife was basically on the verge of crying because they're definitely looking at like their whole life being destroyed, you know. And then everybody hates them for making the apology video, saying it wasn't a good apology and you're still a narcissist. You know, I just, man, I just can't imagine going out there making a video like that. Yes, they read from a teleprompter because, of course, you read from a teleprompter to make sure that you say the right thing. But like, man, so callous that it really turns me off of the internet. It really makes me be like, you know, I really hope that I do want to make my community bigger and everything, but I really hope that I'm never big enough to warrant that kind of attention, you know? Can you send Uzi your Delta? Oh, I could send that later. I'll send you that indicator after the stream. We made something that's kind of almost like a heat map with deltas. He's a great guy as a person who won't comment on the whole thing because I haven't followed it. Yeah. Well, I gotta tell you what, man, that at first I was kind of like, well, we don't have all of the information. It kind of seems to me like you guys are making a bigger deal out of this than it really is. And that's pretty on par for the course for drama that I hear related to Linus Tech Tips, right? But then these like allegations came out that everybody are saying are sexual assault allegations. And I kind of think that kind of changes the calculus now because now we're in this world where like we really don't know anything about what's going on. And, you know, it's kind of almost like you can't even really comment or say anything useful about it, you know? Okay, well, on that particular swing up, the ZB went a little bit further, so, and I'm seeing kind of evidence of maybe two big guys kind of colliding here. So we may continue to dig in this area. D, you were talking about the indicator that I wrote for you, yeah? So I think Uzi has seen it on the screen before. So do you see that like it's going bid, but like the orders are coming in there? Well, they kind of held up. Maybe they're thinking, well, if there's somebody willing to buy there, maybe we should hold off and let them do it and sell at a higher price. No, color coding. I think that D is just talking about the color coding of his footprint chart. Because he sent me a picture of a footprint chart. Ouch. The market seemed to really react to that uptick for some reason. Well, I do kind of feel like that the short-term setup for my trade is kind of passed and didn't come up. That doesn't mean that there's not going to be further downside here and everything. But I do think I'm going to give up on this trade. We still got 5 minutes, but I've had a lot of trades recently that, you know, it really seems like they have a good chance and they do fight it out, but in the end they just don't turn out, you know? There is like something wild going on in the spreads here though, because the 30-year is behaving very differently from the other two. You know, the 30-year was pushing down much harder the whole time. Now that we've pulled back, the 30-year shot back up there a lot higher. So whatever it is that's going on here, it really seems like the action is concentrated on the long end of the curve at the 30. In the 10-year, they've played with that 10 a lot, haven't they? Not as much trade at 09.5, as of late, at least. Curve action was even clearer on the UB. You can see that the S&P 500 is turning back around here. I'm also kind of detecting that the dollar is being pretty dominant here. The Japanese yen is being pretty dominant here. Like, in fact, one even has to wonder if... No, because the thing that we've got to worry about on the short side is the Japanese coming in and defending it. Maybe that's what's happening here. Maybe they just kind of held it instead of really trying to push it back. I don't know. This might be turning... You think it might be turning back around long? Because that's kind of how I'm feeling at the moment. Delta and price have converged? Well, I'm not sure what you mean by that. Well, I took a chance, but I'm just getting suckered here, right? My trading has just been awful lately, man. I kind of feel like I could chalk it up a lot to bad luck, but it kind of feels like the moves that I miss are the ones that just keep going, and the ones that I try and get on are the ones that get stopped in their tracks. I trade the Swiss and Chinese markets if I am an US and EU citizen. Well, so there are some EU markets that you might be able to, you can get Eurex data. Your access to Chinese markets is quite limited. Maybe traded today a little bit out of boredom. Well, no, like, you remember I was saying, like, I don't think I should take a trade, maybe if they break the low. And then they did break the low, so I went for it, and they did the reversal thing on me. I'm sure there's a bunch of smart money concepts people out there that think they're super smart right now. But who knows, maybe it turns back down around later, right? That's often how it goes, is I end the stream and then they go for it, right? But that was way too big of a loss for it. That's the thing that I'm... Why does this keep happening? Even when I was trying to be careful about it, but you know, I decided to put on a little bit extra that time, and it was just dismally bad. No, you know what? I don't think that's it, because that's still like $15. That would be like a moderate loss for me. So really, it's just that I'm not used to the size when I have two on. But you're right, it turned back into slippery and rangy, didn't it? I got too excited by what I viewed as, man, what does that put our account at? I think we're down $200 now. No, we're down 160. That's really bad, right? For me, that's really bad. So I don't know if it's that I am just really off, if it's luck of the draw, if it's that I just shouldn't be messing with these summer markets. Well, it is a mean reversion trade, but the reason why I said that is because it was they traded into the lows, they made a new low by just a little bit and then reverted back up higher. For the way that a lot of those people trade, you would really need to see it like trade all the way back up across the range for it to really make sense, but it would have been a lot better if I had gotten out here. I really want to trade it again and make my money back, but I feel like that would really be a revenge trade, especially at the time. So, but if it comes back, I'll give myself a pat on the back, right? Oh man, that's all very frustrating. I mean, we have our good times and our bad times, but it's been a frustrating month. I think it's been like this, like the whole month, hasn't it? You know, like I'll get like a $10 winner, and then the losers are like $40. It sucks. Okay, I better get going. I will see you guys tomorrow. In the meantime, stay excellent, team.